following is a paid commercial program paid for by McClure Capital Wealth Management Companies and does not reflect the opinions or advice of KRLD or CBS Radio.
Welcome to the Common Sense Investing, or CSI Show, with Victor McClure and Guy Allard from McClure Capital Wealth Management Companies. For the next hour, Victor and Guy will use their combined 60-plus years of experience to answer your financial questions with their own brand of plain-spoken language and hard-hitting style.
Welcome to the Common Sense Investing Show. I'm Victor McClure, my co-host Guy Allard. How you doing, Guy?
Pretty good. How about yourself?
I'm doing fantastic. Couldn't be better. Well, I guess I could, but
well, I got a question for you about the markets. What do you think about tech stocks? I was reading during the week, and NASDAQ over the last few years, I'll leave it open like that, 40-some%. Last year, 30-some%. This year, 15, 16%. It's quite a lot of growth.
That's what they said every single time before the market crashed.
How do you? Not the best time to be buying it, I don't think.
Think
right
about
now.
1999.
Oh.
Well, they said technology stocks will never go down. Do you think there's going to be less computers next year than this year? What are you, stupid?
Yeah.
Okay.
It's the new frontier.
That's right. You
anyway,
don't need actual profits, because remember, that was all just stock profits. Yahoo at the time, when I saw Yahoo was worth 5 times General Motors, and this was before General Motors had all its issues.
People had $10,000 in Yahoo. It was worth $500,000.
Yeah, they had $1 billion in assets or something. But
right.
Yahoo had 0 assets, and they were worth 5 times General Motors.
Bought broadcast.com.
Right. Now you're getting some PE ratios up there pretty strong again. I think the economy's a little better. There's a lot of pundits coming out now saying maybe a 40% drop in the market and all that kind of thing. Oil prices, remember they were a couple of years ago, they were coming off the $100 down to 60 or whatever. But the last couple of years, it's been floating between 40 and 60. Reached, last week, down to 42. Now it's creeped back up some. And if you'll talk to anybody that owns oil companies, which I have clients that do, the really good ones are making profits at about 40 still. A lot of them are not. They're losing a lot of money.
It's a lot harder for sure.
Or it de-incentivizes them to go and drill more because the costs are pretty fixed or going up, and the price is not. But the OPEC is getting together. A bunch of them are getting together, though, this last week.
They're price fixing.
They said they're going to start tightening it up, tightening the screws.
But, the point is, and you hear Victor and I talk about it all the time, about sectors, and just because one sector is doing well or the other is overvalued, you just have to be careful. And we always talk about rebalancing. It's difficult. It's counterintuitive. But if you're taking some of them profits, if your tech part of your portfolio, which it must have, it's up 40% over the last few years. If it's now a larger percentage, you might want to take some money off and put it into some of the other sectors. Just saying.
It is human nature. It's like right now. Real estate has gone up like crazy, right? Tech stock's gone up.
It's hot in Texas.
Real estate. But why? It's so hard to sell a winner or to even downsize a winner. Whatever the case is, it's almost impossible to do that because we're humans. But that is exactly what reallocation and rebalancing your portfolio is.
And that's a really good reason to have someone help you. It's a lot easier for someone else to do it because it's more objective. You have to be subjective about your own portfolio. You just are emotional.
It's throughout life. You got NFL football players are, fantastic athletes. They need another opinion, someone looking at a broader stroke
Coaches.
to give them ideas. That's why they have coaches.
That's right.
Same thing with you go to counseling. Let's say you and your spouse are at an impasse. You go to counseling because a third party, an uninterested third party, can somehow shed a light on exactly the big picture on it.
Doesn't Belichick, going back to your cowboy or to your cowboy, there's a slip, to your football analogy, doesn't he talk to Johnson and get a second opinion?
Yep.
I've heard that he does. He's one of the best coaches ever.
Well, since I'm an American,
yeah, right.
It's only the Dallas Cowboys.
You're a Cowboy fan. I knew where that was going.
I don't know who that other person is even.
Right. What about the Bears? Come on.
The Bears? Oh, is that in Russia?
Might as well be lately. I wish Cutler was. Oh, I'm sorry.
I go all over the world, traveling and different things, and I love, especially because if they're outside of Dallas, they hate that America's team tag so much
Oh yeah.
that I'll play it up like crazy. They'll say, well, what kind of fan are you? I'm like, well, this is America, isn't it? Oh, they just love it.
Right.
And they love you for it.
That's right.
But I can't help it. I'm like, well, I'm ex-military. I'm a patriot. So obviously I have to be a Dallas Cowboy fan.
Without a
I don't
doubt.
understand your question.
Keep an eye on your tech stuff right now. It's made a big move. I hope you've had a part of it. I hope you've been able to enjoy some of that. What we would like even more is for you to be able to keep it.
And the market's getting a little skittish because of the oil producers getting together. Also, a lot of noise around that Trump's agenda could be delayed or not happen, and that's where a lot of the run up came from. And so, uncertainty is what the market does not like.
He just needs to start tweeting about the market.
Start tweeting about everything else.
You might as well.
All right, let's talk about the family love letter. I can't take credit for this. Enterprise Funds, I'm pretty sure that's who it was, came up with this. It was 20 years ago. I thought it was such a great idea, and it hit me personally that something like this was so necessary. That we're going to offer this to all of our clients that call us, but let me tell you what it is first. It's basically telling your relatives, if you pass away, some of your wishes. And these are wishes way beyond a will or a trust. In other words, I'll give you an example. My older brother died of Lou Gehrig's disease when he was, I guess he was 40. And he just woke up one day and was stuttering. And of course, me as a brother, I'm making fun of him. What are you stuttered for? We had no idea what's going on, but it just kept progressing.
How old was he? 40 at this
I think
time?
he was probably about 40. Had 5 kids.
Wow.
We had 5 kids from a previous marriage. He was a paramedic. Him and his wife both were paramedics. He had 5 kids from a previous marriage. He paid bills, etc.
Sure.
Well, when he couldn't talk anymore and couldn't get around, his wife, current wife, started paying the bills. But she had no idea that there's another bank account where insurance premiums were coming out of to cover his other 5 children. And so the moral of the story is she quit paying them. She didn't know. And so therefore, everything lapsed and they didn't get anything. Another story, everybody knows I worked for Dylan Gage for, 20-something years. One of the co-founders of that, died unexpectedly pretty early. Didn't expect to die, of course.
Very early.
I think it was a rare blood disease or something. But it took probably 2 years to find everything. And so that's why you have to have something written down. And you also, by the way, have to let someone know where it's at.
Where this. I was going to say briefly, I was talking to my mom Thursday. We're still trying to get the medical directives and all of that done so that her wishes are taken care of. And she asked me, she goes, well, is there any hurry? Well, yeah.
How old's your mom?
87.
87.
And it doesn't
That means
take
you got a lot of long life ahead of you, guys.
She does, and she's not on any medications, but still,
that's fantastic.
Need to take care of it. But anyway, your love letter.
All right, family love letter. Here's the first part of it. Says, Dear loved ones, in an attempt to simplify matters for you, I have written this letter to provide you with information that will help you when the time arises. Okay? First section is my advisors. You're going to tell them who your financial advisors are, who your accountant is, your attorney, employer, with all the contact information, phone numbers, email addresses, things like that. This is going to be very important to reconstruct what we actually have here. Let's say you've got an insurance person who does your property and casualty insurance, your car insurance, homeowner, stuff like that.
Long-term care.
Life insurance, long-term
right.
care. Who does it? Who has the mortgage? Is it Wells Fargo or Bank of America? Who has the mortgage? You also have stockbrokers and things like that. We don't have stockbrokers too much anymore. It's more like financial advisors now. But then in the next section, you'd have my assets. Here's the investment. Here's the contact person. Here's the phone number. Now, here's a real important part that people forget. Here's where the documents are located at. Because that's what you'll find is they put it into a special place and people are digging through everything and never find anything, right?
That's right.
Or it could be in a safe deposit
Or
box.
months later,
Right.
maybe.
Or maybe they think they do. You had a safe deposit box, but maybe they don't know where the key is. There's all of these kind of things that you have to document for someone. Now, I don't really want to give my 4 kids, all this information right away. I don't mind, but I don't having a bounty on my head sometimes Just like I'm not going to show my ex-wife.
No, but you could prepare it and let your sister have it, or
Yeah,
your
that's right.
brother-in-law, in case
Someone you
something
trust that
happens.
could,
Absolutely.
take care of this for you.
Seal it and let them
Right.
hold it.
Or you can attach a financial statement to this kind of thing and all that. But here's another section. Money is owed to us by. You don't realize, well, if you have relatives like I have, you've loaned out a lot of money. It just ends up getting forgiven because nobody's going to pay it back. You have experience in this?
No, I don't. Why do you say that?
But also, let's say at death, you want to say, I want to forgive some of these loans. In other words, they shouldn't have to pay them back if I pass away. You could put a listing of those. We'll talk about more after the break. But this family love letter, I think everybody should have something like this. I've had people say, well, I've got a spreadsheet. Well, do they know how to get in there? Do they know the password? Do they know what if the computer crashes? Do you have it in paper as well? The location of these things is important. Don't hesitate to call us if you'd like a free copy, 972-715-2424, or go to ilovemyretirement.com. Stay with us, folks. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome to the Common Sense Investing Show, where your investment strategy is always based on facts instead of some sales pitch. Here's Victor McClure and Guy Allard.
Welcome back to the show. Today we're talking about the family love letter. This is a letter that you write. Now it's got a listing of all your assets, where everything is stored, passwords, computer passwords to get onto the websites. This will really help your family in a time of need, because I'm telling you, they're grieving already. And to go through a financial crisis, sometimes you've had sons and daughters that almost lose their job just trying to take care of their dad's or their mother's estate. It's because it's such an overwhelming thing when they don't know where everything is. So it's important to have this where someone knows where it's at. Okay? This is going to be a booklet that's going to show all of the different assets you have, where they're located and all that. In case you get incapacitated, it's not just death,
Right.
but if you get incapacitated, like you get a coma or, whatever, people need to know this. And you can attach DNR requests, all that kind of thing in there.
Don't want to lose assets, and you don't want insurance policies and things to lapse.
That's right.
That if a payment's not made, because the insurance company, they're, sorry,
Right.
It's lapsed. I'm sorry.
That's right.
And the other
They don't
thing,
want to pay.
no, they won't pay. Yeah, there's no exceptions. It's black and white. And depending on your age and where you are, but as we get older, I've sat down with a lot of people. Now, you need to be diversified, and banks have limits as far as guarantees, FDIC, and all of that. But I've seen a lot of people come through our offices that just have a lot of stuff, a lot of,
Right.
like $5,000 accounts or $7,000 accounts. It's also a good idea within reason to consolidate and make that easier
Well, there's
as
also
well.
some things we forget sometimes as financial advisors is personal objects. People will fight over a trinket
Yes,
if
that's right.
someone dies.
That's right.
No. My grandma said, I'm getting that, that porcelain doll that costs, $10. And you'll cause families to fracture forever
That's
because of something, because they don't, the wishes of the person weren't clearly defined. When you're doing a will, a lot of times you go, my stock accounts go here, the house goes here. You forget those little things. You can put this in the family love letter. Let's say you have a storage facility with stuff. Okay, the storage facility, this is the address. The key is located here, or the combination is here. Those are things that are very important you need for your family. Next would be like your liabilities. Here's the liabilities, the contact, where the documents are located, phone numbers. And then what if whoever passed away was a guarantor of some debt? In other words, they co-signed for someone.
Right.
Well, that needs to be put on here, okay? Because the trustee, whether that's a relative or an actual trustee, needs to know all these things, and they're going to need to know your wishes. Because if you're incapacitated or passed away, they're not going to know your wishes beyond a broad stroke will, which doesn't really tell your wishes. It tells you the breakup of certain assets, which they're never all included in there, okay? All your credit cards, account numbers, web addresses, access names, passwords, all of those kind of things. Then a listing of your insurance. Remember, there's different kinds of insurance, right? Life insurance, health insurance. If you're older, they got, Medigap insurance. Everybody's got
Supplemental,
Medicare at a
all of
certain
it.
age. But all of those things have to be put down here, and you got to have the face values. If you have any loans outstanding on them, all of those things put in there. It probably takes a couple hours to have this filled out right, but boy, it will save your family a lot of grief down the road.
And it'll be a working draft.
Right.
I mean, you can always, it's a living document, so to
That's
speak.
right.
You know, you're always changing and amending it.
And you got the disability insurance, long-term care insurance, because you know how many times I've seen it where somebody gets incapacitated, the other one didn't realize they had insurance for this, for some of these things that they just, broke themselves paying for.
That's right.
And so you got to have all that. If you got long-term care insurance, obviously you want that there. It's not the gradual, okay, the person's 90 and they start getting it together, because that's normal. If somebody dies, say, at 62, they didn't expect that, or even younger, right? You need to have these kind of things. Here's all the different policies. You've got to put, here's my auto policy, car insurance, umbrella policy, all those kind of things. And those are good if it's incapacitated and there's a possible litigation on the front. You need to be able to call these insurance companies. You can't have just the one person that is now incapacitated doing that for you. Next section would be like your employment benefits, retirement plans, military retirement benefits, military service, life insurance, all that stuff. Any kind of your employer provides certain things. So if you passed away or got incapacitated while you're employed, somebody needs to know where this stuff is. There's not be stock options and things.
And like we mentioned before, when you go through this, it's just really good because it gives you a chance to audit. It gives you a chance to go through what you have, and you may find some nuggets. You may have a life insurance policy that you've had forever, and you find that it's the cash value is equivalent to what the death benefit is. You may not need that anymore. You may have, and I've got clients, you may have some condos that are in a place in Dallas that they're just not appreciating. The people that are in there aren't current. It's a lot of work. It's a pain in the butt. So you may want to jettison those. And it helps you kind of go through your stuff and, like I said before, consolidate it some.
This is also a central place to have your will and have when this will is signed, because what they're doing is they're looking for the last signed will, right? And the location of that will. Like I said, if it's in a safe, what's the combination? If it's in a safety deposit box, where's the key?
That's right.
But you could have a living will. A living will is like a do not resuscitate kind of thing, or who takes over my finances if something goes on, if I get incapacitated. A medical power of attorney, because it's hard to sign something when you're incapacitated,
Oh, yeah.
right? Medical, it's directives. I think it says detective here. But, we got a break coming up. Today we're going over the family love letter. Here is something you fill out. We're going to offer this free of charge, that you fill out to help your family members in case you're incapacitated or pass away unexpectedly. It is much more comprehensive than a will or a trust. Don't hesitate to call us if you'd like your copy, 972-715-2424. Again, 972-715-2424, and go to ilovemyretirement.com. Stay with us, folks. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome back to the Common Sense Investing Show, hosted by two of the most experienced advisors in the DFW Metroplex, Victor McClure and Guy Allard.
Welcome back to the show. Today we're talking about the family love letter. Remember, I'm not taking credit for this. Enterprise Funds did this probably 20 years ago. I'm reviving it because I think it's that important. They don't exist anymore. They were bought out and merged into something else a long time ago. But this was a piece, I thought. But it's basically showing your relatives, if you get incapacitated or you pass away, it directs them on your wishes.
It gives them
beyond
the
a will or a trust.
It gives
Where
them
to find a
keys to the
key
kingdom.
to
That's
something, a combination to a safe. You don't realize what kind of distress your family's under when this happens to you, much less the financial stress. You can unburden them with a lot of it by taking a couple hours and filling out this form.
I've got a lot of clients that have fixed annuity and CD ladders, and they shop the best rate. They usually call us. And they've got them with various companies, 10, 15 different companies. Right. You may not have all of those listed.
This can be a place for, like I said, your wills, your living wills, medical power of attorneys, general power of attorneys, living trust, insurance trust, charitable trust. Because you're going to tell people, here's what I want to go to charity. It's in this trust, blah, blah, blah. Any organ donation you could put on there. Divorce decree, settlements, all that kind of stuff. Because sometimes when somebody passes away, if they've just recently been divorced, there's a little stick up with the in the
Beneficiaries.
the beneficiaries.
That's right.
You got burial agreement, retirement plan. You could put
Or
all
worse,
kinds
if they got remarried
Right.
and didn't address that.
And let's say you're applying for some military benefits. Well, you need a copy of their DD 214. So those kind of things you can put in one spot. They don't have to all, but this you can have your stuff in different locations. But if you have this family love letter, somebody you trust says, if anything happens to me, if I'm incapacitated or I pass away, first thing you do is grab the family love letter. It's going to show how my wishes are beyond a will or a trust. Let me see what else is in here. Oh, this buy-sell agreements. Buy-sell agreements are important if the one that's incapacitated or passes away and they own a business. Okay? What you have is, if someone goes, instead of giving the company closing down because they got to sell half the company somehow, an
Pay for the
insurance
taxes.
policy is paid to the beneficiaries of the person that's incapacitated or passed away, right? No, just passed away, not incapacitated. But that's what you get. And so those kind of things, you need to have it there. All the business interests you have, if you own any business or portions of businesses, they need to be listed here. All right, let's see. There's the key. Remember, where is the key? What is the combination? What is the password? Very important stuff. Just because you have a spreadsheet that's locked up in a safe that nobody might know the combination, that's not a good thing, right? You got to have this stuff. Now, make sure it's someone you trust. Now, I've got a lot of kids, and some of them, they're all good people. They're all good kids. But some of them, I don't know if I would trust with a safe. They might write it down somewhere and drop it somewhere.
Oh, yeah.
Other ones I trust, they're gonna hold it like gold. All right, let's see what else here. It even says if I'm a member of the following religious groups, fraternal organizations. I want to provide this education to family members. It gives you orders of things as well. I have a special needs family member, want them taken care of, and it gives all the different details of that.
And you'll have certain investments, so we're certainly proponents of it, and we sit down with our clients. We talk about it all the time. Certain investments do certain things better than others, be it income, be it inflation hedge, be it liquidity. And you'll have different investments that do different things better, and this will allow you to explain that to them so they can unwind them appropriately.
And it just reminds you also of certain things you need to have. Medical power of attorneys, if you become incapacitated, guardian over your property, guardians over my person. Like, so who's supposed to take care of me if I'm incapacitated? And usually you'll have a first and second. In other words, if the first predeceases you, obviously it's going to go to the second. You haven't had time to update the family love letter. But also, there's one thing on here that said, in the event of my death, I have the following final wishes. That's not a will, it's the division of assets. This is actually coming from you, how you'd like things handled. And I think that is extremely
Like my
important.
wife, a 24-horse ceremony from Dallas all the way to San Antonio so she can be buried down there. I still can't talk her out of that.
I think I'm leaning towards the New Orleans type where they have a party.
Oh, yeah. I like
Celebrate the life. Don't celebrate the death, that kind of thing.
Yep.
But there's all kinds of, you might have a certain burial plot that you've already purchased that they might not know about. Put that in the family love letter. All of this stuff, you've got an ethical will. There's so many things you can put in here. We'd be more than happy to send this to you. There's a note section in the back. And basically fill this out. Help your family out. I don't care if you're 30 or 90. It makes sense because it'll when you read this, it goes beyond, like I said, what a will or a trust will do.
And this is something that we'd be happy to provide for
That's
you.
right. Don't hesitate to call us at 972-715-2424. Again, 972-715-2424. You can go to ilovemyretirement.com.
Our newly revamped website
That's right.
with the star right on the front page.
That's right. If you'd like to see us at the Star, the home of the Dallas Cowboys, don't hesitate to call us, 972-715-2424. Stay with us, folks. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome to the Common Sense Investing Show, the home of plain-spoken, no-nonsense answers to your financial questions.
Welcome to the show. I'm Victor McClure from McClure Capital. Today we've been talking a lot about the family love letter. Again, if you'd like a copy of that, it'll save your family a lot of grief if you can become incapacitated or pass away. 972-715-2424. 2424 or go to ilovemyretirement.com. All right, let's talk about something that truly depressed me more than death and getting incapacitated.
Ruh-roh.
It was the third annual Retirement Health Care Data Report. It projects what lifetime health care premiums will be when you add in Medicare Part B, D, supplemental Medigap insurance.
Let me guess. The
dental
statistics
insurance.
show that you've got a 100% chance of dying.
That's true.
All right.
Absolutely.
All right.
An average 65-year-old couple retiring this year will need $321,994 in today's dollars
For med?
just to cover medical stuff.
Yeah, that's expensive.
And now, when you add deductibles, copays, hearing, vision, dental out of cost, the top it goes to $400,000.
This is if you're insured?
Yeah.
Nice.
This is if you're insured.
Jeez.
Well, everybody gets, Medicare.
Oh, yeah.
But then you got supplements and all that.
Yeah.
But people just don't realize what it adds up to. And you're paying $10, $15 every pill. Every time you get, as you get older, you get more pills, except your mother. She's healthy enough to
That's
have
right.
none. That's
no
fantastic.
meds.
I have 3 myself in my 50s. So
I have 2.
I'm very jealous.
Me too.
But it's talking about all these things. Now, people don't realize how far healthcare, the inflation that healthcare costs. It was really high, but they're projecting healthcare to rise at 5.47 per year. Now, if you add 5% per year onto your expenses, have some expense going up 5% a year, it is huge.
To put that in perspective, Victor and I use about 2.5% a year for inflation when we do projections, and if your money's going to last, are you going to outlive your money? I can't imagine doubling that to 5.
What you've got is it's triple the actual inflation rate of 1.9%. But like when you're taking 2012 to 2016, that's the study they just did. It's more than double the suggested Social Security cost of living. Now there's something called a hold harmless thing that once you are in Medicare, they can only raise it by the Social Security increase. It's so people that are younger, they're going to get screwed the worst. It's just the way it is.
The biggest increases.
That's right.
They will.
Now get this. This HealthView Services, this is a company that provides information about healthcare costs and projected healthcare costs for financial advisors so they can really do a comprehensive plan. But they say a 66-year-old couple retiring this year will require 59% of their Social Security benefits to cover total lifetime retirement health care costs. That is nuts. 59%. Now, let's go back. Remember I said the younger ones get screwed the worst, right? A 55-year-old couple retiring at 66 will need 92% of their Social Security just to pay for health care.
Yep.
Now, let's even go back. A 45-year-old, this is if they don't do something, which they're not going to increase the benefits of Medicare. Decreasing, I can see, because that thing is on life support now. But a 45-year-old that's going to retire in, say, 20 years will need 122% of their Social Security just to pay for health care.
Now, if you're getting that knee-jerk reaction and you're thinking that with all these medical expenses, that single payer, government, federal controlled health care is the way to go, just look at the Veterans Department and
How
think,
good that is.
Yeah, how good that is. And let's add 300 million more people to that program. That's not the answer.
It's always, anytime you have somebody that's close, like Canadians, they've got a good,
right,
single payer healthcare system. But you ask everyone that I've ever talked to, oh, no, it's better here. I'm like, why is it better here? You get free up there.
I hear they come down here for the serious operations.
It takes like, 2 years to get a heart transplant when you needed it yesterday.
Right.
That kind of stuff.
Right,
You're in line with everybody
Sounds like
else.
the Veterans Affairs.
That's right. All right. I'm not trying to give that information about needing $300,000 or $400,000 for a couple to scare anyone. You have to have extra stuff. Remember, I told you when people do a retirement plan for themselves, they'll do a simple interest cursory plan.
Yep.
They'll say, all right, I got $1 million. I need $50,000 a year. All right, in 20 years, okay, I'm not going to live past 85. I'm good. Well, they're not really good because they didn't factor inflation in on everything, plus, maybe 5% on health care.
And simpler than that, Victor, we talk about it all the time. On these simple calculations, they'll figure that they're good if they make 5% on their investments, and the markets average 6% over the last 17 years, so they're fine And we know that doesn't work that way.
Well, I've looked at, remember we talked about this in the show before. I've talked to people in the last 2 weeks that said, I expect to make, at least 6%, probably in the 8 to 10% range. And that's
Right.
what I've done my plan based on. So I'm fine. And I'm like, you realize the market made 4.06 this century.
And you couldn't take that out every year.
And that beat 90% of all investors. The average investor with dividends made 2% a year. All they're doing is skewed because you forget that's a while back. Market hadn't gone down in 8 years. But if you go back the full 17 years this century,
Yep.
You've made 2 to 4%. Yet you're doing a retirement plan based on 5, 6, 8, 10.
And again, you
Make
can't take that 4% and leave your investment intact.
And even if they do that, they don't factor in inflation.
That's right.
They're factoring in this huge gain in the market that's going to materialize. And I got another thing. I'm going to make 8% a year, Victor. I go, but I'm looking at your portfolio here, and you have 50% in cash. Oh yeah, I'm never going to risk more than half my money. I go,
It
okay,
cuts it half.
50% cash making nothing, and you're going to make 8 on the whole thing. So that means your stock's going to make 16% a year for your entire retirement. But you get involved in it. That's why you need a third party to look at this stuff.
And the short answer is if you're doing the simple calculations on a 6% return per year, if you're in CDs, it's more accurate than if you're in a volatile asset.
Right. Remember, if you'd like to take advantage of our no-cost, no-obligation retirement plan that factors in increasing healthcare costs, inflation, and everything else, don't hesitate to call us 972-715-2424. Remember, there's never a cost or obligation. Call us at 972-715-2424 or go to ilovemyretirement.com. Stay with us, folks. We got a break coming up. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome back to the Common Sense Investing Show, hosted by two of the most experienced advisors in the DFW Metroplex, Victor McClure and Guy Allard.
Well, I'm experienced. Guy is just old.
You mean good looking?
I got you almost.
That's what I think you mean.
That's exactly
Just
what
ask
I was
my mom
thinking,
and my wife. They think I'm awesome.
All right. We developed this show to answer your financial questions. Anytime I find some questions I think is going to appeal to a broad audience, we're going to share them with you. We never use names and stuff like that. You'll see shows doing that, and they're just making up. Troy from Waxahachie called us. It's on,
Go fighting farmers.
So, all right, what's our first question, guys?
All right, first question. Do I have to register for Medicare if I'm still working?
No, you actually don't. But the problem is sometimes the group plan you have will require it. Because what they're trying to do is they're going to slough off the big stuff to Medicare.
Yep.
But some don't. Some of the bigger employers, they've got a better kind of plan and they don't. But you do not have to if you're still working as far as the Medicare department is concerned. But you do have to if the employer plan requires it. And so that's important. I'm going to go over a couple things of Medicare. Some people don't realize Medicare is mandatory. You don't have a choice. Once you turn 65 and start to collect Social Security, you must enroll in Medicare Part A. It covers hospital costs. If you don't want, no, let's say, get this. If you don't want to enroll in Medicare and you've already been receiving Social Security benefits, you have to pay them back. I don't want that.
Tell you, there's a lot of folks that when you tell them you're on Medicare, they don't even want to see you.
Oh, I know.
Unfortunately.
You got to have a supplement.
Yes.
You have to have a Medigap supplement kind of policy.
Yep.
Because I remember my mother-in-law, we were looking, she just has plain old Medicare. And there were, I live in Prosper, and there was, I think, one in McKinney. Then you had to go down to like Mesquite and Garland to find any more. I'm like, that's a long way from me. And so they always want some kind of Medicare. Hell, a lot of doctors nowadays are saying, I'm not taking insurance.
My mom's got Medicare and the Medigap and the supplement, and we went to one of these emergent care places, and it didn't matter. Just because
Medicare
the
Part
Medicare
A is free.
didn't want it.
This is the hospitalization part. It's free if you've worked at least 10 years and credited at least 40 credits, which is 10 years. A credit every quarter.
That's right.
All right. If you're not collecting Social Security, you can delay enrolling Medicare penalty-free under certain conditions. You can't make any more contributions to your HSA accounts. Those are health savings accounts. Remember, health savings is good because you put the money in there, tax deducted, it's triple tax benefits. It's tax deductible, grows tax-free, comes out tax-free if it's used for medical stuff.
But Obama penalized us on that, but I digress.
That's what you want to do is, but once you're signed up, remember, you cannot contribute to an HSA anymore. If you fail to sign up under your initial enrollment period, whoop, whoop, all right, you sign up for B, it covers outpatients like doctor's fees. It begins 3 months before your 65th birthday. Includes your birthday month and it extends 3 months after it. So if you're born in May, it's going to go May, June, and July. And then the 3 months before that. If you miss that window, there's a 10% penalty for each year you were eligible but failed to enroll. Wait until 70, for example. That 5-year delay will cost you 50% of the standard B premium every month you're enrolled in Medicare. That's bad.
That's a lot of money.
Especially
if you're retired.
And what it does is there's also 1% per month delayed enrollment penalty for Medicare prescription drug plans. So my advice to everyone out there is enroll. Don't let this one go. Like I said, if you're working, though, you do have 8 months from when you quit working or when that plan goes away to enroll. And that'll give you a free enrollment period there. But remember, Medicare has a lot of gaps in it. You've got to have some kind of Medigap thing. And even a Cadillac plan is not that expensive. If you've been used to paying for full health insurance for all these years,
that's right,
you could probably get a full plan, but the best there is, pay everything, maybe $200 or $300 a month.
Which is good when you're at that age.
Oh, yeah, absolutely. And the one thing people don't realize either, living abroad, let's say I have a home in so-and-so when I turn 65, I'm staying there for a couple of years. That is no excuse to the Medicare department. So people don't want to enroll if they're going to be in a foreign country for 2 years because they got to pay the Medicare premiums, right?
Yeah.
But if you do not, they're going to penalize you for it.
Do they take Medicare in Italy?
No.
Just asking.
They do not.
Oh, darn
That's
it.
why you've got expats. You're either going to stay there forever,
right.
or if you come back,
yeah,
you're going to have to pay these penalties for not doing in the Medicare. So you got to be careful with this stuff. If you're going to leave, if you miss your initial enrollment period, you got to wait another year. All right, and it's like January to June. It starts in July.
Are you penalized for that year?
Oh, no, not the year. If you wait you are penalized for the one time you missed. Yeah.
Got it.
Income determines your Medicare premiums. If you're single, if you make more than $85,000, most people pay $134 a month. You're going to pay between $187 to $428 a month. If you make over, say, $85,000, if you make over $170,000 married filing jointly, that's when you pay the big, $428. Next year they're changing the brackets, making much more narrow, so it's real easy for someone to get caught up in the high extra 400, and they're going to start raising that over time too.
Well, I got a different
more
opinion.
Good news from the.
I got a different opinion on that. If you're paying 400, life is good because you're making a lot of money.
That's right. That's called a high class problem.
That's right.
I still don't like paying the government anything. Thanks a lot for listening to the show today. We always appreciate it. Don't hesitate to call us if you'd like to take advantage of any of our services. Retirement plan, Social Security Optimizer, Family Love Letter, our number 972-715-2424, or go to ilovemyretirement.com. I'm Victor McClure for Guy Allert. We always appreciate your time.
The preceding show is paid for by McClure Capital and is for informational purposes only and not a solicitation or representation of any particular investment, product, or service. Any views and opinions do not constitute financial, legal, or tax advice. Consult with your appropriate professionals before making any investment or savings decisions. Always consider your risk tolerance, time horizon, and objectives in making any financial decisions. There is never any guarantee of future success or performance.
The preceding was a paid commercial program paid for by McClure Capital Wealth Management Companies and does not reflect the opinions or advice of KRLD or CBS Radio.